What if I told you the $1.5 trillion Wall Street giant quietly teamed up with one of crypto's most underrated projects? And almost no one even noticed, right? It just happened, and I almost spat out my coffee when I found out. And the story that I uncovered left me equal parts amazed and excited. So there I was, scrolling through crypto news on a lazy morning, coffee in one hand, when I see Franklin Templeton, yes, that's the $1.5 trillion asset manager, mentioned in the same breath as VeChain. Wait, did I just say VeChain? Yes, I did, because this is the blockchain that I remember tracking wine bottles and supply chains, right? Now, Franklin Templeton, as in the legacy kind of investment firm that rubs shoulders with BlackRock. And so my brain, it did a double take. It kind of felt like finding out your quiet hometown bakery is suddenly partnering up with Starbucks. Worlds colliding in the best possible way, right? Now, naturally, curiosity kicked in. I had so many questions. Why would an old school financial giant choose VeChain of all the platforms? What does this mean for VeChain? And maybe for my bags of vets sitting in cold storage. And then there is the bigger picture here that everyone is missing. Now, I knew I had to investigate immediately, right? I even hopped into our free educational Discord server. The link is in the description, by the way. So see what kind of anyone, or at least to see if anyone else even had spotted this. And here's a side note. If you haven't already joined, right, you're totally welcome to. It's a great place to kind of nerd out about all things crypto with us. But let's get back to the story here, because I dove headfirst down this rabbit hole, piecing together what might be one of the most significant crypto partnerships of the year. So grab a seat, because this personal adventure is about to get wild. All right, let's set the stage. Franklin Templeton is no small fry. They manage roughly $1.5 trillion in assets. They've been around for decades, managing mutual funds, 401ks, the works. Basically, they're the TradFi, at least as TradFi as it gets, right? The kind of firm that your grandparents might have their retirement money in. On the other side, we have VeChain, a layer 1 blockchain that's been laser focused on real world applications. So if you've been in crypto for a while, you'll remember VeChain from 2017-2018 era as the project that partnered with luxury brands to verify goods, track supply chains, and even worked with Walmart China to ensure food safety. Now, VeChain has always been about enterprise adoption, not hyping up retail traders. And I'll admit, in recent years, it kind of fell off a little bit of the hype radar. It wasn't making sensational headlines like Ethereum or the latest meme coin. So seeing VeChain suddenly pop up next to the behemoth of like Franklin Templeton, you understand why I was stunned. I was like hearing your quiet, nerdy classmate is now celebrating, or at least I should say, celebrating a collaboration on a project with Elon Musk. You would be like, wait, what did I miss? Well, it turns out quite a lot. Franklin Templeton has been experimenting in the crypto space under the radar, and this VeChain partnership is their latest move, potentially their boldest one yet. But the crux of it is this. Franklin Templeton is integrating something called the BENJI platform into VeChain's blockchain. Now, BENJI is essentially Franklin Templeton's in-house platform for tokenized assets. Specifically, it offers tokenized shares of the Franklin on-chain US government money fund, or FOBXX for short. Now, let's be real. Regulated money market fund, right? It's about $780 million in size, holding very boring, very safe assets like US treasuries, cash, and government bonds. In traditional finance, FOBXX is just a conservative fund where each share is meant to stay at around $1 in value. Low risk, super stable. But here is the kicker. Franklin, it took that fund, tokenized it, created BENJI tokens that represent a share in the fund. So one BENJI token basically equals one share of that $780 million fund, aiming to stay pegged around $1. It's basically a stablecoin. but backed by a US government money fund instead of US dollars sitting in a bank account. It's pretty cool, right? Now, it's fully compliant, it's regulated, it's managed by professionals, not some algorithm or snarky kind of promise. Up until now, Franklin has deployed BENJI on a bunch of different blockchains: Ethereum, Polygon, Arbitrum, Avalanche, even Stellar. Fun fact, Stellar actually holds the largest chunk of BENJI tokens right now, around $432 million worth. So BENJI been around, right? But mostly, flying under the radar of the mainstream crypto crowd. Now, by adding VeChain to the mix, Franklin Templeton is expanding its reach, or the reach, of this tokenized fund platform, giving VeChain's ecosystem a serious new building block. Okay, let's talk about why this is such a big deal. Picture you're a business building on VeChain. Historically, you might have used it to kind of track products, let's say, verify supply chains maybe, and you've probably interacted with VET, or maybe even in a few kind of stable coins. Maybe you started to get involved with VBETA, right? Whatever it may be. But now, thanks to this partnership, you actually have an enterprise on VeChain, that you suddenly have this new payment and treasury option, the BENJI token. Now, these tokens are effectively, at least as effective as stablecoins as a dollar is, right? But also yield bearing. Since they represent a share in a government fund, you could pay suppliers or settle transactions in a token that's always been around a dollar. But unlike USDC or Tether, this one earns interest while you're holding it. That's a huge value proposition for enterprise users. It's kind of like the crypto equivalent of using a money market account for everyday payments instead of letting your cash just sit idle. Now, Franklin, even kind of said that this gives VeChain's businesses and institutions a differentiated way to integrate tokenized money market funds into payment and cash management. In plain English, it's cash that works 24/7 on the blockchain and grows a little while you hold it. Now, why VeChain? What does VeChain bring to the table that Ethereum or Stellar doesn't? I was asking that question too, right? And here's what I found out. VeChain has a dual token model, right? VET is the main token, right? The cryptocurrency, and V4 is the gas token used for fees. Now, that system allows for very cheap, predictable costs because V4 supply can be adjusted to keep the fees low. You can also use VIP 191 to delegate it so someone else can pay the fees on behalf of the users. In contrast, if you try to run a money market fund on Ethereum, you risk getting slammed with sky-high gas fees during peak hours, which is not ideal if you're trying to manage something stable. Now, VeChain boasts consistently low transaction fees and fast settlement times. It's perfect for things like distributing yield or executing batch payments. Also, VeChain runs on a kind of proof of authority consensus model, which is designed to be efficient and enterprise grade with vetted validators. It's also environmentally friendly, which obviously is what they're really all about these days. They're kind of marketing themselves as a sustainable L1 blockchain. Now, that might appeal to a company like Franklin Templeton, which has ESG goals to consider, and maybe they want their ESG to be transparent. And here's the cherry on the top, right? VeChain's CEO, Sunny Lu, said that bringing together Franklin Templeton, BitGo, and Keyrock on VeChain offers an unrivaled value proposition with a long-term sustainable mindset. Now, that's CEO speak for this is a killer combo and we're playing the long game. And yeah, about those partners, BitGo and Keyrock, let me explain. BitGo is one of the top digital asset custody providers. They're the guys, or at least they're the guys institutions trust to kind of hold crypto assets securely. Think multi-signature wallets, insurance, compliance, all the bells and the whistles. Now, their involvement means big players can hold BENJI tokens on VeChain without worrying about security or regulatory headaches. Keyrock, on the other hand, is a major market maker and crypto investment firm. They're stepping in to provide liquidity and derivatives support. The translation? They're going to make sure there's always a healthy market for these tokens. So, if someone wants to buy or sell, they can do it smoothly without slippage or massive spreads. spreads. Together, BitGo and Keyrock, they signal that this isn't just some kind of pilot test. This is a full-fledged product launch with serious infrastructure surrounding it. It's kind of like opening a luxury hotel and bringing along your own private security and, concierge team. Everything is covered and institutions can feel safe checking in. Now, let's talk about the bigger picture here, the competition. Franklin Templeton isn't doing this in a vacuum, right? They're competing with BlackRock. Yeah, the BlackRock, right? And of course, Ondo Finance in what's becoming a real hot or red hot sector, tokenized real world assets. Now, BlackRock launched its own fund on Ethereum called BURADL. It's a cute name, right? And it kind of ballooned to around the $2.4 billion in market cap. Massive. Ondo Finance is also in the race with a $700+ million fund. So Franklin Templeton's $780 million fund sits at the number 2 globally. Pretty respectable. But here is where it gets interesting. Franklin's fund has far more actual holders, like 690 versus fewer than 100 for BlackRock. Now that tells me that Franklin is going for broader adoption, not just massive whale clients, but lots of smaller holders, maybe through retail apps or more accessible platforms. Now, by integrating with VeChain, Franklin is basically expanding its reach even further. They're not just chasing raw numbers here. They're building out an ecosystem. And that ecosystem, well, it's about to get a big boost from this partnership. Because, let's face it, right, VeChain's DeFi scene, it isn't exactly thriving. It has around $1.7 million in value, at least total value locked, right? It's peanuts compared to Ethereum or even Solana, but by bringing in a real yield-bearing fund onto VeChain, you invited liquidity, DeFi builders, and enterprise users all at once. That's the kind of move that can kickstart an entire layer of growth. New DEXs, lending platforms, collateral kind of strategies, all built around the BENJI as the backbone. And if Franklin Templeton, well, they actually potentially do win too here, right? More users for their fund equals more assets, equals more fees. It's a win-win. So at this point in my research, I started having a bit of an epiphany, right? This is kind of what crypto adoption really looks like. It's quiet, it's boring, almost invisible at the first glance. No one is screaming Lambo or when moon here, right? What we're talking about is a money market fund and a supply chain blockchain, or even an eco-friendly blockchain now, as I should say, with VBetaDAO. It's doing a bit of a fusion dance. And what makes it even more powerful is that this is the kind of fundamental stuff that makes crypto infrastructure actually usable, not just speculative. Now, I'm going to admit, I had my doubts at first. Why VeChain, right? Is VeChain really ready for finance use cases? But then I saw what they've been doing lately, and my skepticism turned into true and utter respect. Let me share a very quick story that is sealed, at least that kind of sealed the deal for me anyway, right? VeChain wins pharma tracking, right? Back in June, a study compared blockchain solutions for pharmaceutical supply chains, including ones from IBM, Hyperledger, and others. And guess what? VeChain's toolchain came out on top. It was the only platform that successfully integrated blockchain with IoT, that's Internet of Things, sensors, this is things like NFCs, RFID chips, to track drugs from end to end. Now we're talking about monitoring movements, temperatures, authenticity, all in real time, all on chain, and it is huge, right? Even Bayer, yes, the global pharma giant, piloted a program using VeChain's tech to track clinical drugs with timestamp blockchain data. If a company like Bayer trusts the system to protect drug safety, well, you've earned your stripes. So yeah, when Franklin Templeton says we're bringing our fund to VeChain, it's not out of the left field. It does actually make a lot of sense. But maybe Franklin Templeton wanted a blockchain where their product wouldn't just be one of many, but actually the star of the show, right? On Ethereum, a $780 million fund is just another number. On VeChain, it could actually be the foundation of an entirely new financial layer. Now, let's talk about one last feature that I discovered here, right? And it's almost kind of blew my mind. Franklin Templeton recently introduced something called the Intraday yield on the BENJI platform. Basically, instead of paying out interest once a day or a month, they actually calculate and distribute it in real time. Like if you were to hold the BENJI for 6 hours, and you would get 6 hours worth of yield credited to your wallet instantly. It's absolutely bananas. Now, this is only possible because of blockchain technology, and VeChain's low fees make it actually practical. Now, you could literally watch your balance grow in real time. It's kind of like your wallet becomes a ticker showing you your earnings every few seconds. So, as a financial nerd, I geeked out hard over this. Imagine your bank doing that, right? You'd open your app and you just watch your balance slowly ticking up by the minute. It's addictive. And on VeChain, the fast finality, cheap fees, well, this actually is finally doable. It's just another example of how blockchain doesn't just copy the old financial system, it just improves it. Now, let me hit pause here for a second and get something really important out of the way. And this one might just shock you, but I'm not a financial advisor. Nothing in this video is financial advice. Cryptocurrencies, they are highly volatile, and you could lose all of the money that you invest. It's important that you do your own research and consult a qualified professional. After all, your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses, and this video today is just for entertainment and educational purposes only. Phew. Now that we've got that out of the way, let's wrap this thing up, right? If you're thinking about exploring VeChain or getting some VET, I'll share where I trade. I use Kraken Pro. Their fees are low, the interface is solid, and I trust them. And yes, I've got an affiliate link for Kraken Pro in the description. So if you do use it, it supports the channel here at no extra cost to yourself. Totally your call, but thanks in advance if you do go ahead and use it. Also, don't forget that if you're vibing with these stories and you want to keep the conversation going, come and join our free educational Discord server. The link also in the description below. We've got a smart, friendly community, and some of them were already way ahead of me on this VeChain news. It's noob friendly, and you know, maybe your insights will inspire the next video. So, what are the key takeaways here? Well, the VeChain Franklin Templeton partnership isn't just another press release. It's a quiet signal that crypto and TradFi are merging faster than we think. And VeChain, the supply chain or eco chain underdog, actually just got its ticket to the financial big leagues. So if you've enjoyed this deep dive and my little adventure of connecting all the dots, do me an absolute solid favor. Hit that subscribe button for more stories just like this. I've got plenty of wild crypto tales and personal investigations that I cannot wait to share. So subscribe, stick around, and I'll catch you all in the next one.